This is what I like to break down for every single trader, okay? Let's take a look at what we have at this time. The S&P 500 is at an area that I said is going to be one of the most important days of 2022. Let me ask you guys a question right now. Does it feel like one of the most important days of 2022? You might be scratching your head and saying, why is this so important? Because today is the day that we are finding out, are we strong enough to break through the downtrend of 2022? The downtrend that has been holding for the past 11 months now. We have entered month 12 of 2022. We have now moved all the way from the top to the bottom, from the top to the bottom, from the top to the bottom, and we are hitting the top once again. Now, this is the day that traders are saying to themselves, we're either breaking out of this downtrend or we're going to be dropping back down. Do you know how many people I talked to today that said that they are going to be doing a put? Can you blame anyone for wanting to do a put contract today? When I say, hey, look at the past chart history pattern, and every single time we have hit this purple line, every single time we have hit this downtrend, it has led to a 2-month-long downtrend to a brand new low of the year. A lot of people are going to be doing that same exact thing. I mean, you could think about this in any sort of way if you guys want to. Think about how history repeats itself. Think about it as you being a child and you doing something that your parents don't allow. If you tackle your little brother and you get grounded, you now remember, if I tackle my little brother, I get grounded. Now, let's say you get out of timeout and you tackle your little brother. Would you be shocked if you get grounded? The answer is no. If you went to a store and you robbed the store and you went to jail and you get out of jail and you say, okay, what's going to happen if I rob this store again? You're probably going to go back to jail. If I touch this downtrend here and it drops, and I touch this downtrend here and it drops, and I touch this downtrend here and it drops, what does past chart history tell me? It tells me that if I start looking for a put contract somewhere right around this region, it's probably going to be the best opportunity for a possible short. Let your history determine what you could do in your future. And that's how we do it with stock trading. Now, at some point, this purple line will break because we know, as the stock market being in the United States, the market will rise. There has never been a time in history that the stock market has fallen and it's just continued to fall. We've gone through the Great Depression and we recovered from it. We've gone through the dot-com bubble and we've recovered from that. We've gone through 2008 and we've recovered from that. We've gone through pandemics and we've gone through that. Do you guys think that we're going to be all the way down towards 350 forever? The answer is no. Let's take a look at the past 12 years in the stock market. Since 2008 happened, the market moved on up and we've been moving up ever since. And it's been almost 13 years now since we've had a very strong red year. And as you can see, 2022 is our very strong red year. You know what's so great about this and what's so awesome about this? Once we have a red year, we know that we are now going to have great odds that we're going to have a green year coming on up. Over the last 90 years, there has only been 4 times that we have had multiple red years in a row. We're talking about when the dot-com bubble happened. We're talking about when the Great Depression happened. Nearly every single time we have any sort of red year, it's followed by 3 or 2 or 5 green years in a row. Here's 1 red year, here's 3 green years. Here's 1 small red year, here's 2 green years. Here's 1 red year, here's 2 green years. Here's again our multi-red year, here's 5 green years. Here's 1 red year, here's 6 green years. When you have a red year, you have massive opportunity ahead of you. This is not, again, stating we're going to have red years forever, because I feel like a lot of people are biased towards which way they believe. People are biased towards, oh, we're due for a dump, we're due for a crash. Hey, you know what? The feds are lying to us. We are still going to be coming on down towards lows. I think, again, you could be 100% correct. I am not biased towards any way. If the market wants to dump, let it dump. But if the market wants to rise, let it rise. All I'm saying is, over this history and these stats, when we see that we have 1 red year, there's a great chance that the upcoming 1, 2, 3 years are going to be green. Now, I can say also, if we ever had back-to-back red years, let's say hypothetically 2023 is a red year, I would take out absolutely everything I have and put it into the stock market, because there has only been, all the way back in the dot-com bubble and Great Depression, that we've ever had more than back-to-back red years. And we know that green is going to be coming on up. So far, if we want to kind of take a look at the average, these pullbacks, the markets are currently down around 15% still on the year. If we just go right across the board, we only have basically our major recessions that we all know of that are above this line, which we're talking about 2008, which we're talking about the dot-com bubble. Other than that, we have red years a good amount of time. They're not that dramatic. And right here, we're basically sitting right at that kind of average line, right around 15%. So is there a good chance that the upcoming year is going to be green? Absolutely. And is there a good chance that we could start going green as we move into 2023 after we break through this downtrend? Absolutely. But traders, let's start using our head and let's start thinking about this. A lot of people are asking me, hey, can we go on the call side? You just said we could have 2, 3, 4 green years ahead of us. Can I start getting involved right now? Obviously, we all know the best entry so far was all the way down towards around 350, 348. And if you had an entry at 350, 360, 370, 380, 390, that has been amazing. But for you to buy right now at the price of 408 is not not very smart because we know you are buying right before a wall. Let's think about it in this manner. Let's imagine my phone right here is a brick wall. And someone said to me, Sean, I want you to run through this brick wall, but you have to stand right in front of the brick wall. So my starting point is here. How far am I going to go? Am I going to break through a brick wall like that? No. If someone said, hey, I'll give you $1 million if you could break through this brick wall, what would I do? I would take 10, 20, 30 steps back. I would get a 3-point stance, get super athletic, run as hard as I could, lower my shoulder, then again smash through it. You are essentially going to be buying right in front of a wall where you don't have any wiggle room. If you hit this wall, there's a great chance you're going to fall back on down. Well, Deck, how do you know it's going to fall back down? Because it did it here, and it did it here, and it did it here. So what is going to allow us to break through this very strong resistance line? What is going to allow us to feel confident to go ahead and buy and break through this area? We have a few things that you guys want to know. Is Friday, December 2nd. The jobs report comes out tomorrow at 8:30 a.m. Eastern time. Jobs report is going to be very important and very crucial. What to expect Friday's jobs report? What you usually want to see in a jobs report is seeing we've added jobs. Doesn't that sound positive? Doesn't that sound awesome? That makes traders happy. But that's actually the opposite of what you want to see. If you want the market to rise tomorrow, you are going to want to see them say, we don't and we have not added as many jobs. We don't want to reach expectations. And let me explain why to you, because I know that's going to be very confusing. If we have added more jobs than expected, that's going to make the Federal Reserve feel like, hey, we can keep interest rates at a high because people are adding more jobs. That means the Americans are going to have salaries. That means we can keep interest rates high, and that's not going to affect their way of living. But if we have a bad jobs report and we see higher unemployment and we see that we're not adding jobs, well, now the Federal Reserve is going to be more fighting a little bit of a moral political stance, basically saying, oh, can we keep raising interest rates? I feel like that's not fair to, again, all these people, all these Americans that don't have jobs, that are unemployed or don't have the opportunity to get jobs here. We can't keep raising interest rates to something that they can't live on. So if we think about it, we know the market has been dropping in 2022 due to high inflation, which again has made us have to raise interest rates. And now if we see that everyone has jobs, well, that's going to make the Fed say, hey, you know what? That's okay. Let's keep raising interest rates. Everyone's good. But if we see that the jobs report is actually bad, that's going to make the Federal Reserve say, hey guys, we can't keep raising interest rates so much. That's not fair to all these people. So that would lead towards them probably dropping interest rates. And that's actually what's going to lead towards the market going on a nice pop tomorrow. So tomorrow is actually a little bit of an opposite of what you would usually think. If we do not have a good jobs report tomorrow, or let's say we do have a good jobs report tomorrow, which leads to a little bit of a drop. If we can't break through this area, we are most likely going to consolidate not only tomorrow, but we're going to consolidate probably over the next a week or so, where we are going to probably get little touches up to 410 and maybe a break up to 412. Then the next day back on down to 404. Then the next day up to 410 and then back on down. See basically what we did next to 400. Notice again, right around 400, we hit 400, we fell on down. We hit 400, we fell on down. We hit 400, we finally broke out of it after Jerome Powell just stated that we're most likely going to be going to 0.5 interest rates. What is going to be another time that we could feel very confident that we are going to break out? We have 3 different ways to see the stock market go on massive spikes. Number 1 is going to be when Jerome Powell speaks. This big red day right here is from Jerome Powell speaking at the Jackson Hole, Wyoming conference, where he said that we need to stay aggressive and we're going to most likely be keeping at 0.75 interest rates. Now that was back in August and the market absolutely collapsed from that. We also saw CPI data, which has led to very big drops. And then we've seen actual interest rates being stayed at 0.75 be very big drops. So let me repeat that here for a second. The 3 biggest ways to move the market in 2022 has been Jerome Powell speaking, referring to interest rates, if that's either us staying at 0.75 or us going to 0.5. Number 2 is CPI data, which we get every single month that tells us how, again, inflation is doing from the previous month. And last but not least is the Federal Reserve's meetings on if they are actually coming out with the factual, hey, we are raising interest rates or we are not raising interest rates. So the next big 2 things that you guys want to be looking for is going to be CPI data, and we are going to want to be watching Federal Reserve rates. Now, we already talked about Federal Reserve rates do come out on the 14th, and someone please correct me if I'm wrong because I'm not 100% sure, but I believe CPI data for the month of November comes out the 12th, and that's huge for us. If all of a sudden we see that inflation is not having a pullback and inflation is not dropping and inflation is not coming on down on the 12th, that means most likely we're going to stay at 0.75 rates. But if inflation is falling, then we're probably definitely going on to the 14th where we will be having 0.5 rates. It is going to be a very, 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 very crazy week. from the 12th to the 16th. I'm having Swing over in chat saying Dex CPI data is on the 13th. I thought it was the 12th. It's the 13th. I apologize. So we know our federal rates, though, are coming out on the 14th. The feds are going to need the CPI data from the previous month to determine what they're going to be doing with those rates. This whole entire week could be nuts. Let's think about both sides of this. Let's say the CPI data shows that inflation is still growing. We've been raising rates 7 times. We have not had any sort of big pullbacks yet. Inflation is still rising. What do you think is going to happen? The stock market's going to dump. It's going to crash. 2 days later, Jerome Powell says, yeah, sorry guys, we were going to do 0.5 rates, but unfortunately you guys saw the CPI numbers. We just can't do that yet. All the way back on down to 350. We would see a massive dump. But let's say all said and on that, we have first the CPI data from November come on out on the start of this week, 12th or the 13th, and all of a sudden what happens? Inflation's falling on down. Stock market climbs and spikes. Jerome Powell speaks 2 days later. 0.5 interest rates starts going on even a bigger rip and run. So if we have two things in the same manner on that week, we are going to definitely see a lot of craziness. We're going to see a lot of ripping, a lot of running, a lot of spiking. It's going to start getting a little bit more difficult though when we go back and forth, where maybe we have good CPI data, but we still stay at 0.75. Or maybe we have bad CPI data, but we go ahead and say, hey, let's do 0.5 interest rates anyway. So that's going to be where things kind of get a little bit iffy. Best case scenario is two things on the same side. Too bad, CPI 0.75. Too good, if we have good inflation with, again, 0.5 interest rates. That's when you're going to have the best move. But that's going to be a huge week coming on up. And that basically kind of rounds up everything that we've been talking about. If you want to get involved into the stock market, you are going to be getting involved right now at an awesome time, an amazing time at this moment, because we can easily see that once we break this area, you are breaking a trend line that has been holding for the past 11 months. But we're probably going to need some sort of news. That's either going to be the jobs report, that's either going to be the CPI data, or that's going to be the Federal Reserves coming on up. And until we break this downtrend, until we break this purple line, I don't know if I can buy with confidence. I don't know if I'm going to be able to get in this downtrend with confidence until we break this purple line. How could I possibly want to get in right now and feel good that I'm going to make money? Because it didn't happen there, it didn't happen here, and it didn't happen here. So that's why I would say stay on a put right now with a stop loss at the price of 409. And if you're saying, hey, Deck, I'm going to do that. I'm going to get a put contract right now, and I'm going to have a stop loss at the price of 409 or 410. I think that's fine. Worst case scenario, you lose a little bit of money. Yes, you would lose money if it goes in the opposite direction, but you have so much opportunity to fall with very little risk. Now, if it breaks 410 and starts spiking, go on a call. We know we're breaking the strongest downtrend of 2022, where you could see an absolutely amazing move. So the S&P 500 here is such a critical time for puts, for again calls, for CPI data, for Fed interest rates, and for the outlook going into 2023. December is going to be absolutely huge from not only what happens in the chart patterns, but of course what happens in the news. And this is going to be setting up 2023. If we go into 2023 and we're floating around, let's say 440, I think every single trader would probably start saying to themselves, we're going back up towards these highs up near around 480 eventually. If we're starting 2023 back on down towards 365, I think every single trader is going to say, hey, get ready for some more pain going into 2023, at least for the first 3 months or so. That's what I want you guys to get. And that's what I want you guys to gauge. So make sure every single trader is taking this information, understanding it. And if you have any questions, comments, concerns, as always, please let me know. Happy to help you guys on out. You guys are absolutely terrific. Awesome work.